Hello and welcome to day 2 of the ET Soonicorns Summit powered by AWS and Intel. I'm Maloni Bhatt and I'm very excited to kick off with our guest for the inaugural keynote, Anupam Mittal, founder People Group, among the most popular sharks of Shark Tank India. Anupam, delighted to have you with us here today to speak on igniting the culture of entrepreneurship and sparking change across India. Welcome to the ET Soonicorns Summit.
Thank you, Maloni, for having me, and thank you, ET, for doing this summit. I think it's a great initiative, and I'm super pumped and excited to be here. Happy to share my thoughts, experiences, and of course, learn as much as I can. So fire away.
Thank you very much, and we're so glad that you're here. You started your entrepreneurial journey in the early 2000s. You know, the word startup at that time was unheard of. Entrepreneurship not celebrated as it is today. For over the past few decades, you know, in your role as an entrepreneur, startup investor, advisor, mentor, and recently as Shark Tank judge, you've really seen this ecosystem evolve. And today, as you look upon the culture of entrepreneurship in India and the Indian startup ecosystem, what are some of the trends that you're particularly excited about?
Yeah, I think that's a great question, Maloni. I have been fortunate to have a front row seat, to this ecosystem actually being formed, right? When I started, as you pointed out, in the 2000s, there was no internet really. So the digital ecosystem, the first requirement is to have a robust infrastructure, and that itself was lacking. You know, I often say that the internet in India is really just 4 or 5 years old. Many of us have been using email and other applications for a long time. But if you look at the widespread usage and the intensity of usage, it's only after Geo revolutionized the prices of internet access that we've seen everyone and anyone in this country being able to really consume the internet and use, it for all it's worth. So I think, we've just started the journey. That's the first point I want to make. What was your question again, Maloni? Sorry.
Well, as you look upon this culture of entrepreneurship in India and the startup ecosystem, what are some of the trends that you're excited about?
Yeah, exactly. So I think the first point was, look, the infrastructure is just forming, so it's early stage. And my second point is, if you look at the history of the last 20 years, what's really interesting is that we've never really had a long run as far as digital investments and ecosystem building is concerned. So let me take you back to sort of 2000, when the dot-com boom first happened globally, right? So India had a funding window of, let's say, 2 years where a lot of money came in, but it disappeared as quickly. So you never really had a lot of companies being formed. And so it was sort of a first flirtation with digital investing, if you will. Then came 2006-07 when the dot-com bust started to come out of that period. And we again had a very small window of 18 months of investments in what was the early stages of ecosystem building. And 2008 happened, Lehman Brothers, right? And so again, for the next 2-3 years, it kind of disappeared. The same thing happened again in 2012, 2015, and right up till 2018, we had these flirtations with digital investing and VC investing in our country. I think it's only after that we've had a real solid run of 4 or 5 years of deep investments, where last year was historic in terms of investments, number of companies turning unicorns, number of companies being funded. So I think as a result, because we finally had a long run of investments that have happened and enough capital has gone in, lots of companies have been formed. and you have the makings of a real ecosystem, right? So what are the makings? What do you need for a real ecosystem? You need a lot of capital. You need exits. So we've seen IPOs, we've seen mergers and acquisitions gaining steam in the last 24 months. You need talent, right? When we started, we used to struggle with getting a product designer, getting a engineer, right? They were called programmers back in the day, right? And now you've got depth and width of talent, right from UX designers to front-end engineers to full stack developers. So I think all that has led to India's engineering class coming out on the front of this rapid change that we are seeing. As a result, many of them now have opportunities not just to be professionals working in IT services firms, but entrepreneurs, right? And I think that is perhaps the most exciting trend that we are seeing, and so I think that's going to continue. I think now that the ecosystem has been formed for quite a while, I think we're going to continue to see a lot of great companies come out of India. I think there's a lot of belief in engineers and people in the country that, look, if we have a good idea and we're willing to put the work behind it, there's enough people out there, from angel investors to VCs to Ps, who will fund us. So I think this is going to continue for a long time. And my sense is, just at a very macro level, I think just the way we became the top scientists and doctors in the world, I think Indians will emerge as the top entrepreneurs in the world, because every time there is opportunity, we somehow manage to come through at the top, right? We just need to see that there's an opening here, and we need to develop that belief, and we always end up coming out front. So I believe this is what's going to happen, and that's probably one of the big macro trends that you'll see shaping the world, which is technology being built from India and by Indian entrepreneurs for the world.
All right. You spoke of investments. You've invested in over 200 startups, including, top leaders in space like Ola. More recently, during Shark Tank, also, you invested in about 24 odd startups. You launched Dream Deal, which is the first of its kind social media funding platform. Can you tell us about the idea behind a Dream Deal, and, what do you hope to achieve by such a program?
Yeah, sure, Melanie. Actually, it's a very simple thought that led us to launch Dream Deal. If you look at funding and you look at the last few years, if you just look at where the funding goes, it's pretty amazing. Look, I'm not knocking the funding. The more capital that comes in, the better for our country. What amazes me is that a very few privileged people manage to access this funding, right? It is the people who've got the degrees from the IITs, the IIMs. Disproportionately, you will find that it's the people from IITs and IIMs being funded. And the people who know how to work the crowd, who know how to get access to VCs and VC networks, right? That's a small club. If you happen to be somebody who has a great idea, but have not come out from a great school, or you don't have a network, how are you going to ever get funded? And I believe that everybody deserves a shot. If you look at many of the successes in the world, even my own example, some of the biggest companies in the world, founders who are celebrated today, ultimately it all started with somebody or some situation giving them an opening.
Taking a bet on them.
Somebody taking a bet on them, or them getting lucky and stumbling upon something. There had to be the first step for them to be able to build $100 billion company or $10 billion company or $1 billion company. A lot of people in our country have no idea how to take that first step. And we said, look, if we were to go out and say, we're going to fund you, it wouldn't solve the problem, because they don't even know how to build a business plan. They don't know how to go through this process of getting capital. They don't understand equity and dilution and Series A and Series B. There's just somebody in a village, and I can give you some examples. For example, we have a guy who is the son of a barber, and he saw that the tea vendors struggled with washing their glasses. As a result, they use paper cups, which cost them a lot of money. So he's built a machine that washes tea glasses, right? There's another guy who mother is a domestic worker. And he saw that his mother had a problem getting a job every time she wanted, or it was not that convenient, or people had an issue finding domestic workers. So he's building an app called MobiBuy, right? But he doesn't know how to access capital. And what all these guys need, what's common, is all they need is money to get a proof of concept out or a prototype out. So we said, hey, why don't we launch something that gives them that capital without any expectation in return? Because I don't want to have to negotiate with them on deal terms because they don't know that. So we said, look, we're not even going to make it an investment. It's going to be a grant. It's free money, right? And then the second problem we said was, okay, even if we do it, how do we get these people to participate? Because they may not know how to. We said, wait, the easiest way is to simply make a video of yourself. And we said, let's constrain them creatively and let's make it a 30-second reel on Instagram. They're all familiar with Instagram. And we'll just use that to evaluate them. And that's what we did. We were blown away. I gave you a couple of examples of the type of entries that we got. There are people making leather out of mushroom. There's somebody making medical delivery device. The one thing that's common, they're all from small villages, remote parts of India. Many of them, I wouldn't say all of them. And they come from extremely impoverished or humble background. So we think everybody deserves a shot. And I don't know. We've given a grant to a few companies this time. Hopefully, we make this a regular thing. And my dream is that one day, one or two, or some of these guys go on to build billion-dollar enterprises. What a story that would be, and what an inspiring tale that would be for the rest of the country. And I believe that. Look, I use this example a lot. A few decades back, nobody climbed Mount Everest. But now every second person is going to Mount Everest. Why? What changed? Right? Everybody started believing they could do it because somebody else did it. So if we can change that, I think we'll change the nation. And that's what we're trying to do with Dream Deal.
A dream deal for entrepreneurs from small town India, and for us to showcase the India story. But with the slowdown in startup funding, amidst all of this backdrop of high inflation, the geopolitical risks, commodity prices, public market volatility, has your investment strategy changed?
Well, yeah, I mean, look, I would be surprised if people haven't changed their investment strategy. So yeah, we've had to tweak it a little bit as well. But frankly, let me just give you a little backdrop in terms of what we look for, right, Maloney? So, fundamentals don't change as far as we are concerned, as far as I'm concerned. But yes, you change, you roll with the punches, you change with the time. So, we fundamentally look for very, very strong entrepreneurs because we come in at a very early stage. And we have always believed that it's not just good products that make great businesses, it's understanding of how to build businesses and markets, right? So we've always looked for founders with strong commercial acumen because we know finding product market fit is difficult. And the guys who have business acumen tend to move towards where the profit pools are, which holds you in good stead during tough times. So I think that's been a common theme for us. So that hasn't changed at all, right? We also obviously look at very large markets, right, potentially. And that's something that's interesting. In India, in the last few years, the entire VC ecosystem, me included, is guilty of that. We now are going through a hangover, but we all got drunk on, abundant capital, believing that the markets are much larger than they are, right? India, if we start to break it down, India one is what really represent a lot of the buying that's happening digitally. And that's nearly nowhere as big as the 3.5 trillion economy that we talk about, right? And so markets start to come down in size pretty rapidly once you start cutting that. So, we made a few mistakes in the last year or so where, we did a lot of, not a lot, but a few momentum deals, a few FOMO deals, right? Because, we're just sitting out and watching this caravan run by and you felt foolish not participating in it, right? Although you knew innately that, look, there's something wrong here. This market doesn't exist, or this is not going to end very well. We've seen the movie before, but can you afford to really sit out? So, we participated in some of those, but by and large, we feel good because we've always backed strong entrepreneurs with good business acumen operating in large markets. And so our portfolio is doing well. We continue to do that. We continue to make investments. We're doing, outside of Shark Tank, I'm doing 20 investments a year, 25 investments a year. And the spaces that I'm still very excited about, right? Now that we have the belief in our country and we have a large ecosystem of engineering and product development talent, I think we are now ready to build for the world. So the TAM expands amazingly. And when you think about India building for the world, I get very, very excited about that. We are early investors in a company called Agnikul, right? For example, right? Deep tech, building for the world. They launch satellites into space. They're making their rocket company like SpaceX, except that they're doing it at a very, very low price with frugal engineering, right? Company's doing extremely well. We're very excited about it. We were early on in this space. So we think that's one theme that'll continue to play out, which is building technology from India for the world, whether it's SaaS or whether it's deep tech. Mm-hmm. The other theme, Miloni, is what I think some of the core bottom of the pyramid problems that are unsolved as yet. So solving for Bharat. I'll give you an example of a company, Animal. It's animal plus small, Animal. So it's a very interesting company. We came in at the first round. We owned a healthy percentage. Founder comes from a village herself, and she went to IIT after that. And essentially what she's trying to solve is build a marketplace for cattle trading. In India, it's highly fragmented and highly unorganized, right? And if you look at the numbers, it'll just blow you away because every farmer buys or sells cattle at least twice a year. And generally speaking, they're exploited by middlemen who take advantage of their situation. So they are seeking to address this problem with Animal. And, unsurprisingly, the company is doing extremely well. So these are the kind of problems that I think will have a lot of opportunity to scale in India, for India, or for the world.
Anupam, you must be the only VC who's admitting to FOMO and admitting to making mistakes in investment strategy, because we've not come across any who made any mistakes so far.
Oh, right.
Looking at the environment that we're in, how do you think companies can continue to evolve and strengthen? Only the test of fire makes fine steel. So how do you scale across economic cycles? How do you stay relevant? Shadi.com, from its advent in 96 has become a household name. India's number one matrimonial site. Now, how do you continue to find new ways to monetize? Continue to grow and stay at the top?
Yeah. Well, first, let me start with saying that, and in there, while it's going to sound rather superficial, but in there is a deep message. So we don't call ourselves a matrimonial site anymore, right? We started out as one, but we are a matchmaking company, right? Yeah. Why did I say that? Because in there is a message. You have to keep reinventing yourself, right? As time goes by, if you want to stay relevant, you have to keep reinventing yourself. I'll give you an example. One of my favorite examples is MTV, right? They kind of were such a rage when I was a young kid, and they just grew with their generation and lost relevance, right? As opposed to reinventing for something else. Today, of course, they're trying hard to reinvent with reality shows and so on. So they still have found an audience, but for a long time, they just stuck to their knitting and it didn't serve them well. So I think reinvention as you go along is very important. Horses for courses, and different times call for different strategies, right? The second thing is customer focus. I think we complicate things a lot in life. And if you look at the fundamentals of business, it's ultimately about serving a customer better than others can at a price that the customer is willing or can pay, right? And we complicate these things and we start sort of, talking about ecosystems, and we start talking about strategies of connecting this customer to this, and then I will create an adjacency in beauty products. And once I have beauty products, I'll create an adjacency into wellness. All that's fine and good, right? When you're dreaming, build your castles in the air, as I say, but your feet need to be firmly planted on the ground. And the ground reality is that your customers are the most important people in the room, not your investors, right? And if you're building for your investors so they can mark up their investment, you're going to head straight into a wall, right? So I think that's the second aspect, is to really have strong empathy for your customers and build for your customers, not for your investors, and not for the newspapers, most certainly, right? So I think that's another message that people should keep in mind. The third is, about foundations, or actually not foundations, but business fundamentals. In my life, right, I have learned very early on, and I come from a business family, and a lot of people come from business families as well, who I find today in startup technology companies. But somewhere along the way, we tend to distract ourselves when we start looking at all these crazy stories when liquidity is abundant. To me, there is only one profit, right? The cash that you make, right? But we've come up with so many different definitions of profit in the last few years. Community adjusted EBITDA, and this adjusted EBITDA and that adjusted EBITDA. So that game you're playing is a lie to yourself and the world, right? You're playing a valuation game. You're not playing a value creation game. I think that era is behind us, at least for some time, until the next bubble. And I think people are going to be forced to really become, to use a sort of vulgar term, dhandewala, or to become a, hardcore business person, and become extremely commercially savvy and chase profit pools, not capital pools, right?
And do you see that happening? Because I think you recently pointed out that profitable startup founder and not startup founder is actually the most searched criteria on.
No, that was actually a joke, because our minister had said that, startup founders is becoming a search term on Shadi.com. And so I just kind of corrected it in line with the times. But in all honesty, I think that is happening. I think where it's not, the market is brutal, right, Maloney? The market doesn't care about how a founder feels. The market doesn't care about how old a founder is. The market has no mercy. So if you don't, put that hat on, if you don't pull up your socks on that front, it's going to wipe you out, right? It's merciless. And so I think that's happening already. But the good news is there are a lot of great, solid founders out there who are not drunk on easy capital, who want to build solid long-term businesses. The conversations I'm having with founders these days, we're talking about, what does your company look like 20 years from now? And they have a view, they have a vision. Of course, it's not going to be what they think it is, but at least they're thinking like that, right? So they're talking about building institutions. And, to build an institution, you first need to build a business. You need to generate profit to build an institution. So I think a lot of smart, veteran or experienced founders get it. I think easy and abundant liquidity, pretty much for the newbies, let's call them that, or people who are just in college or just graduating out of college, they didn't have the experience. And I think this abundance of capital perhaps made them think that, look, building a business is all about raising capital and then raising a next round. And I think they will need to find their feet again, many of them, because the rules have changed. But as I said, the good news is, India is well equipped with great founders who understand business, who are going to build great companies in times to come.
All right. But how does this all then sit? Yes, of course, you have to be profitable, but there is this growing awareness of corporate governance of startups, and as you said, define the clear path of profitability, but then do it sustainably as well. These are not just buzzwords now. How do you see these young crop of startup founders gearing up, to deliver not just being profitable, but also being sustainable?
Yeah, so look, Maloney, my sense is, and I'm not going to mince my words, I think many of them are going to die as companies. And, I personally also think there are many unicorns out there that don't deserve to be unicorns. And I think many of them will uncorn, if I can use a corny word like that, right, in time to come. And so, look, that's the reality of the market. It's brutal, right? And if you didn't have a great business model and you haven't found product market fit, even after raising $500 million, it's the end. It's the end. There is no way of coming out of that, right? But I think you're question about how do you grow profitably, sustainably, and yet sort of try to maintain a growth rate that's attractive. I'm paraphrasing here, but I'm suspecting that's what you meant. Look, I think it can be done, right? The best form of funding, right, in my view, is the funding that your customers give you, right? If you have a good product and you have a good market, the flip side of what's happening today is also that competition is going to be less. So when there is a mad race for capital, if you want to survive, of course you have to raise capital. What are you going to do if the guy next to you in quick commerce goes and raises 500 million? You don't have choice but to raise that kind of money. Otherwise, they're going to subsidize the hell out of the product and you're out of business. But when markets tighten up, that liquidity is not going to be available to anyone. So at that time, as we always say, right, when the tide's back in, is you see who's standing there without clothes. And so the guys who know, who are focused on their customers, who have their foundations, fundamentals correct, will be able to use the capital far more effectively and efficiently. So I think the capital requirement will come down. The expectation from investors of growth rates will come down. It's already happened, right? Earlier, if you told somebody you had a 40% growth rate, they wouldn't engage with you in a conversation because they were looking for at least 100, 200% growth rate annually. That is unsustainable unless you're subsidizing customers. Right? The only way to continue growing at that speed for years at end is by giving away discounts and giving away products free. Otherwise, markets take time to shape and evolve. So I think the expectation will change in terms of growth rate. And I do believe that founders will find ways to grow sustainably.
All right. With that, Anupam Mittal, thank you so very much for your time, for your insights. And I hope that this will result in some big learning, and thank you for sharing so much, your own mistakes, the gaps that have made you who you are, and the way you continue to nurture the ecosystem.
Thank you. Great being here, Melanie, and hats off to you guys and ET. I mean, you're doing your part in terms of nurturing the ecosystem with summits like that. Hope we continue doing them and look forward to connecting again.
All right. Thank you so very much. Bye-bye.
Bye.